Well, folks, unfortunately, my worst fear has come true for investors. And I want to show you exactly kind of what's transpiring here, what exactly has happened. My worst fear in the stock market is never, especially if I think about not just myself, but other investors, it's never like a crash or a bear market or things like that. Like you have to expect that. You know, crashes are going to happen. Bear markets are going to happen. Rough stocks are going to happen. Stocks you lose money on are going to happen. All those things are going to happen. That's part of being in the market, right? But what I see going on right now it scares me so much more than any of that stuff, because this is a long-lasting thing. And from a mental standpoint, this actually hurts way more. And from a dollar amount, people are going to end up losing way more money, essentially, okay? And so I want to just kind of explain exactly what's happening here in detail so everybody understands this, and you can look out for this. And it happens to people and they don't even realize it's happening. So hope you guys enjoy this. As always, if you're looking to join my private stock group and apply to join us in there, check out the pinned comment down there. So going into 2020, and I just want to kind of, take a step back here and just kind of talk about the last couple of years in the market, right? Going into 2020, it definitely felt like it was going to be a good year, right? 2019 was a good year in the stock market. The business climate was pretty optimistic. A lot of executives were pretty optimistic on what was going to transpire in 2020 and whatnot. And it looked like it was probably going to set up for a pretty good year for the business climate and a pretty good year for the stock market overall, okay? Then out of nowhere, Rona comes out of nowhere, right? Which I actually have right now. And that comes out of nowhere and it completely destroys the stock market. The stock market has the fastest crash in the history of the stock market. It was something like S&P 500 went down something like 34% in like 22 trading days or some ridiculous amount, right? It was down in a straight line, just in epic proportions. And stocks crash across the board. Many stocks lose 50, 60, 70, 80% of their value in less than 1 month's time, right? Now, because everybody's talking about, the economy is going to close for several years and all these things, right? And all these businesses have to shut down. There's a lot of talk that many corporations are going to go bankrupt, or we're going to be a fraction of the size that they used to be, right? And so everybody just started to really give up on the market, especially, as the month of March went along. Just kind of like, we're done. Like, this is it, man. Like, this is, we're going to be in the Great Depression. And that's the way a lot of people viewed it, right? And then all of a sudden, the market starts to absolutely take off. And people are like, what? This can't be real. We got to crash back down, right? Like, there's no way. Like, this is going to be like the Great Depression. Like, there's no way we're going to come back. And what do we see over the next couple quarters? It's not the end of the world for companies. Companies are actually holding up decent. A lot of earnings down, a lot of revenues down, but it's not like the end of the world. And then as time goes on, earnings continue to come back stronger and stronger and stronger, to everybody's surprise. Like, what the heck is going on? Okay. And things just get better and better. And next thing you know, the market's at all-time highs, S&P, the NASDAQ, stocks in general, right? So that leads us toward the end of 2021. And, 2022 is supposed to represent the first full year of the economy being reopened again, and all that excitement, right? Like, if you go back to October, November, that was the talk. It's like, this is here. Like, we're going to reopen this economy for real. Like, the fear around Rona has subsided now. And so up and away we go. We're going to be back to a very healthy economy, back to a very healthy stock market, back to very healthy earnings. This is great news, okay? And what did everybody get slapped in the face with was another crash, essentially, okay? And the market just went down and down and down. Obviously, growth stocks got hit the worst by far in that crash, right? Then by June, people are talking about, oh man, we're going to be into a great financial crisis 2.0, where all the indexes are going to go down 50%, right? And now all of a sudden the market's come back a bunch, and now we're back into this same phase again, where people are like, this can't be real. We're going to have to crash back down. No way, okay? And this is a whole cycle we have been through just in the past couple years. And unfortunately, this cycle is completely screwed with people's minds in a massive way. And when I say people, I really mean investors that are in the market. This is screwed with their minds so bad because they have had their brains fried over the past 2.5 years, okay? Now, where I want to start here is 65% of Americans are doing the exact opposite of what they're supposed to be doing, says investing expert. This is a great article I read on Make It today, okay? If your favorite store was offering 13% off merchandise, chances are you'd be filling up your shopping cart. But if you're like many Americans, you may find you're not quite as enthusiastic about a markdown when it comes to buying stocks. The S&P 500, a common proxy for the broad U.S. stock market, is down 13% for 2022. By the way, at the peak, it was down about 24% at the lows back in June, if I recall. But 25%. But folks aren't buying more stock at cheaper prices. Just 1 in 4 Americans say it's a good time to invest in the stock market, according to a recent survey from, this company, essentially. Think about that for a moment. 1 in 4 Americans say it's a good time to invest in the stock market. Who's right? Are Americans on average right, or are they wrong? Just think about that for a moment. Are they usually right, or are they usually wrong? Food for thought there, okay? And 65% say they're keeping more money than they should out of the market out of fear of investment losses. Those fears aren't entirely unfounded. Any investment has a potential to go down, and investment losses can be painful, especially for people who plan to live off their investment income in the short term. If your investing goal is years away, however, letting fear keep you out of the market is a big mistake. When the market is doing well, people are throwing their money at it. When it's doing poorly, they're keeping their money out. It's doing the exact opposite of what you're supposed to be doing, right? This is what happens when everything looks great. People want to flood their money in, right? And when it looks like the end of the world, or they're really scared, they don't want to invest anything, right? It's like, I can't do this, right? But wait, you may be thinking, I'm going to wait 5 years to get my cash back in the game. I'm just waiting for the market to hit bottom so I can ride it back up. Here's the problem. In order to earn long-term gains, you need to be invested in the market's best days, and those often come right after the worst ones. Over a 20-year period ending December 31st, 2021, the S&P 500 returned an annualized 9.52%. Now remove the 10 best days from that period, and the return drops to 5.33%. That's crazy. Just remove the 10 best days. That's just crazy to have that dramatic of a drop, right? According to analysis by JP Morgan. Over that period, 7 of the market's best days occurred 2 weeks after one of the 10 worst days. That is crazy. We have no idea where the bottom of downsizing is, or the downswing is, but we know that almost for sure, if you're keeping money out of the market, you're going to miss the uptick. The worst thing you can possibly do is to not be in the market when it starts to turn around. And it sucks because, you could tell people this, and you can tell them this, and you can tell them this, and you can tell them this, and you can show them the data and the facts and the history, and and people still don't buy it. And it's unfortunate because it's like, you could show them it over and over again, and people still like, it's like a human emotion thing that they can't overcome to just realize, oh my gosh, like I'm missing this big opportunity, but it's based upon fear, right? And this fear leads to more and more fear of like, I don't know about this, right? For me personally, I obviously, was buying like an animal this year. And for me, I try to always keep 10 to 30% cash. And I broke my rule in the month of June. Essentially, I went under 10% cash, and I got all the way down to I think 4 or 5% cash, which is the lowest I've been, oh my gosh, in a long time, to be quite honest, in a long time. And, that's even lower cash level than I was in December of 2018. And the way I kind of think about it is, I think of it kind of as like a war and a battle, right? And so the stock market is my enemy. I'm fighting the stock market, right? And if the stock market is in a very weakened state and it's my enemy, I need to go in for the kill now. I need to go and attack them while they're in a weakened state, essentially, okay? And so when the stock market is in a weakened state, when it's down huge and it's crashing and everybody wants out of these stocks and it's just sell, 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 and every day you wake up, all the stocks are red, and the next day you wake up, all the stocks are red, and the next day you wake up, all the stocks are red. That's when the market's in a very weakened state. So being that the stock market is my enemy, I need to go in for the attack, which my ammo is cash, right? I need to go in for the attack when this baby's getting absolutely hammered and it's down a bunch, right? And I need to be a little fearful when everything's flying high. It's going to the moon, as they say, right? And everything's looking great and grand, because that is a moment when, let's just call it my enemy, the stock market, is in a very strong state, and I actually should be a little scared of the stock market. Now, The only reason to not buy in stocks has nothing to do with your feelings about the economy or thinking you're some genius and you know exactly how the stock market's going to perform and how companies are going to perform and how earnings are going to perform and how this stuff's going to work out, okay? The only time to not buy is if you are in a position of weakness, okay? In a position of weakness is not you being scared. If you're in a war, you better not be scared. You better be ready to fight, okay? And so that's no excuse. A position of weakness is if you're in a very weakened cash state and you need to build up some cash, okay? So the only time I'm trying not to buy, essentially, is if I'm trying to build up my cash reserves, essentially, okay? And that's something I'm doing actively right now because I put myself in a position where I nearly went all in the market, essentially, right? Where I had like this much cash. Now I need to build back up my ammo, my supplies. So now I'm using this moment in time as we just go higher and higher as a moment for me to kind of catch my breath here and get back in a position of power. Because if you have no cash around, you are in a position of weakness, right? And you're not really ready to fight that battle, essentially, right? It's a little like art of Sun Tzu, as some people know it out there, okay? The way I think about it is imagine you're commanding the Roman army. And you could constantly be in war with your Roman army, but the problem is your army, as great as it is, it's going to eventually get tired out, right? You're going to lose a lot of soldiers. They're going to be tired out, essentially. And so I was in a war for 8 months straight, right? From basically November when the market started to drop all the way through June, from November 2021 through June of 2022, I was in a war there, right? And we were battling. And now I finally get a chance to revive my army a little bit and kind of get back into a good spot, okay? But the problem is people just, keep their army kind of on the sideline while their opponent, which is a stock market, is in a weakened state. And that's the exact moment you need to be, going after it. And then when do these people decide to finally fight against their opponent, which is a stock market? They decide to finally start investing in it and throwing money at it and battling with it when it's at full strength. And you just got to understand, now you're fighting a much tougher enemy, right? If, it's a very much a different situation whether you buy Tesla stock at $600 a share when there's a lot of fear, or whether you buy it at $1,200+ when there's a lot of FOMO in it, right? It's a big difference. Like, would you rather go in for the fight when it's 600, or would you rather go in for the fight when it's 1,200 and everything looks great and everybody's just hyped out, right? These are the sorts of ways I think about the market as somebody that's been doing this for a really, really long time. And it's unfortunate because just a lot of people don't think with the same exact mentality, and they get tricked into kind of the fear mentality, and they get tricked into buying when everything looks great and either selling or not buying when things look horrible. The stock market is your enemy, and you need to be ready to battle it, which is battling is putting money in it when it's in a weakened state, okay? And just continue to do that. Now, the other thing I'm noticing, and this is even from like a Wall Street perspective, is Wall Street's still very scared about the market. And it's not just from commentary. I'll listen to these folks that go on CNBC or whatever, very cautionary or bearish, right? But, look at the pricing activity on a day like today. What's the only stock that's up? Apple. Where do people love to hide out money? Apple. And the other stock is Microsoft. So when Wall Street's scared, they run to stocks like Apple. They run to stocks like Microsoft, right? That's what they do. And they run out of basically everything else. So this just kind of shows you that the market is still very, very scared. The fact that Apple is getting close to an all-time high again does not mean the market is super excited and it's risk on. The fact that Apple is getting close to new all-time highs again is a show that people are still very scared. And so they're like, where do I hide out my money if I do have money invested in the stock market? Let me hide it out in Apple stock, okay? And that's the way people view that. Let me hide it out in Microsoft stock. Those two stocks specifically are the two stocks that everybody likes to hide out in. People don't really like to hide out in the banks, even though you might think that is. Look at how the banks have performed. They don't like to hide out money there. They don't like to hide out money with, higher growth stocks. They don't like to hide money in stocks like Amazon. They don't like to hide money in stocks like Meta. They love to hide it in stocks like Microsoft and Apple, and sometimes Google is like the third wheel. But those are the two main ones, okay? And so that just goes to show you how really fearful the market still is. Is it gotten more bullish over the past month or two versus where we're at? Absolutely. But are we still in risk on time? No. Look at the pricing. Look at how much so many of these other stocks are still down, and look at how close these stocks are to 52-week highs. Still a lot of dang fear out there, okay? I saw this recently, is huge, okay? Bloomberg says this indicator has a 100% track record, which if you aren't that good at math, this is not better than 100%, okay? 100% track record of calling the bottom. Whenever in a bear market, the S&P 500 closes above the 50% fib retracement, it has marked the end of every single bear market. The S&P closed above the 50% fib retracement on Friday. So, maybe this is a one time in history. This, doesn't come through essentially, right? And it doesn't happen. Or maybe it just stays at 100% and, we just, are getting back into another bull market here. We'll have to see. I just think that's important. I just kind of want to show you guys there. I mean, when you got something that has a 100% track record, it's at least worth kind of keeping an eye on it. It's not like it's like a 55% track record or a 65% track record or even a 75% track record. It's 100%. I think that's kind of big. Okay. This is a message I gave the private stock group last night on something. Okay. It said, late night thoughts. I wrote this super late at night. I was very sleepy, but I got it done. Said, what if I told you the S&P 500 should have never gone down 50% from peak to trough in 2007 to 2009 like it did? We all assumed that move down was warranted given the weakness in company earnings in mid-2008 through mid-2009. Also, just in general, fear. The more I think of it, the more that move was likely way overextended by some one-off factors. I have no clue how I've never thought of this before. I have also never heard anybody speak about this. Think about what we just witnessed in the crypto crash in the past few months. Crypto brokerages and exchanges going under, algorithmic stablecoins going to zero. These things caused a bunch of forced selling, even in the biggest cryptos like Bitcoin and Ethereum. This made Bitcoin fall even harder than it should have. The fear led to more fear, and things got ugly very fast. 2008 and 2009, we witnessed massive amounts of investment banks and banks in general go under. Many of these owned, guess what? Stocks. We've never seen that many investment banks and banks go bankrupt in a matter of a 12 to 18 month span in any time in modern history. Like, you can go back and pull up lists. I think Wikipedia has a great list of all the financial institutions, banks, whatever, that went under in that situation. It was insane, okay? They own, guess what? Stocks. If an investment bank, a fund, whatever is being liquidated, the things get sold, a la stocks and securities. Sometimes things get sold in a quick fashion. This is called a fire sale. With all this selling pressure and not enough buying pressure on the other side, the price must go lower. This is simple supply and demand, Econ 101. The truth is, the indexes probably should have never fallen 50% plus in that crash like they did, but with that many banks going under, it was a perfect storm to pull an epic crash in the stock market. Now, let's take ourselves back to mid-June 2022. 2022, NASDAQ down about 34% from peak. Many were not satisfied. They wanted to see the NASDAQ down 50% plus like we saw in the great financial crisis. The truth is that it is really difficult to have happen. You need an extraordinary amount of things to transpire simultaneously to get that epic of a move. The great financial crisis was great for investors in the respect that it made everybody a little more scared of problems that could come and arise from anywhere and cause people to lose a lot of money. That causes us to keep leverage in check, which I think ultimately is a good thing, right? On the flip side, though, it makes us think that if we get a recession, we must see home prices completely collapse and indexes fall 50% plus from the prior peak. That can always happen, but the majority of time, it is delusional. Food for thought, okay? And I will say the great financial crisis definitely did screw with a lot of people's minds, because now people many times think, we're in a recession, economy's in a bad place, earnings are falling something, and they automatically assume, we're going to go down 50% plus in the indexes and real estate's going to collapse. There was an extraordinary amount of circumstances. It doesn't mean it can't happen again. It's just people have this dream of like, this has to happen, and that's not the way this works, okay? It's not the way this works at all. And so I just think that's kind of some food for thought there, guys. And so I just think this is a very important video I just put together, and I hope everybody remembers the things we just talked about in this video, because it'll help you not just in the current market, but it's going to help you in future years as well when you get into scary times and things like that. If you're motivated to scale your portfolio to 6, 7, 8 figures and beyond, and if you want access to my private stock Discord chat, access to all my courses that give you everything I possibly know up here and all those sorts of things, then apply with the pinned comment down there. Join us in the private stock group. Much love as always, and have a great day.